Hi everyone, good evening. Is my audio video clear? Please let me know in the comment section. Please let me know if my audio and video is clear. Then we're going to start with the class. So our topic for today, okay Prem. So our topic for today is we are going to do a few more schemes from Ministry of Finance. We covered a few schemes yesterday also, and today we are going to cover a few more schemes. Okay, okay Rushi. Okay then, let's begin with our session. Let's not waste time and let's begin. So I hope yesterday's class was clear to you. The schemes that we did yesterday, I hope all of them were clear and I hope there was no doubt. So let's begin with the session now. Okay, so the first important scheme for today is your Atal Pension Yojana. So Atal Pension Yojana, I have also taken up a YouTube session, a very detailed. So that one session was completely on Atal Pension Yojana on YouTube. So if you want to read about this in detail, then you can watch that video as well. But though we are going to cover all the things over here as well, but if you want a detailed analysis, you can watch that class on YouTube. So Atal Pension Yojana, again, this is related to pension. So the launch year is 2015. So most of the schemes, that we've seen yesterday also and today also, most of them have been launched in 2015. So, after the NDA government took charge in 2014, so major schemes were launched. That is still important even today. These schemes are even important today. We see, news related to these almost on an everyday basis. Okay, so again, Atal Pension Yojana under Ministry of Finance. Implementing agency will be PFRDA, Pension Fund Regulatory Authority of India. Okay, then it is a central sector scheme. So I hope the difference between central sector scheme and centrally sponsored scheme is clear. Who's going to tell me? We did this yesterday. So who's going to tell me what is the difference between centrally sponsored scheme and central sector scheme? I'm waiting. So yesterday I told you what is the difference between the two, between your central sector scheme and centrally sponsored scheme. I want you to write in the comment section. If you have attended the previous class, you will be able to tell me that what is the difference between your central sector scheme and centrally sponsored scheme. So Atal Pension Yojana is also a central sector scheme. So what is the reason for this? What is the aim or the objective of Atal Pension Yojana? It is to ensure social security for all Indians. So to ensure social security, focusing on the disadvantaged, focusing on the economically disadvantaged, underprivileged, and people from the unorganized sector. So which is the main, beneficiary under this? Which is the main beneficiary? Everyone, but the focus is on the unorganized sector. So yesterday we also saw the difference between organized sector and unorganized sector. Just to recall, organized sector is your formal sector wherein every law of the government, like filing the ITR or any kind of social sector scheme, all these apply to this organized sector. And in the unorganized sector, we took the example of a street vendor, wherein the laws of the government are not applicable, and this is informal in nature. And we also saw that almost 80 to 90% of the population is involved in the unorganized sector. So Prem is saying a central sector scheme is fully funded by the government and centrally sponsored scheme is partly funded by both state and state and the central government. Absolutely correct. So for those of you who did not attend the class yesterday, central sector scheme means that it is entirely funded by the center. And in case of centrally sponsored scheme, maximum it is with the central government. So central government is sponsoring, but there is contribution of the state government as well. State government is also going to fund the scheme. Okay, so I hope it's clear to you now. Next, so just remember that Atal Pension Yojana is for the disadvantaged, underprivileged population, for the unorganized sector. It is a social security scheme basically. So it is open to how, what is the age group that it's open to? 18 to 40 years. So this age group, that this should, you should remember. So in yesterday also we did Suraksha Bima Yojana, Jeevan Jyoti Bima Yojana. So the beneficiaries, the age group was different. It was 18 to 50 years in one of the scheme, it was 18 to 70 years in the other scheme, and now it is 18 to 40 years. So that you have to remember. So in Atal Pension Yojana, it is 18 to 40 years. Okay. And then you have to have a saving bank account or a post office savings account, obviously, because from there only, your amount will be auto debited. Okay. Here also there is auto debit facility in Atal Pension Yojana also. So now, in this case, you receive a pension between 1,000 to 5,000 rupees. So either you get a pension of 1,000 rupees, or 2,000, or 3,000, or 4,000, or 5,000. So you start getting the pension after the age of 60 years. So when do you start getting the pension amount? After you cross 60 years of age. But what is the age limit? Till when can you pay the premium, or till when can you avail this scheme? It is 18 to 40 years, so do not forget it. Okay. Now if after 60 years, the person has died, the beneficiary has died, that amount will be given to the spouse. That amount will be given to the spouse. And if both of them die, if the spouse also dies, and the person who has insured himself, that is the person who has paid the pension premium and who has to receive the pension amount, if both of them die, then whoever is the nominee, the amount goes to the nominee. Okay. And suppose in between, say that person had taken up at 20 years of age, he had started out with the Atal Pension Yojana, started giving off, but say when he turned 30 years, he died. So in the same account, the wife or the husband, whoever, they can also put in the money after the death of the beneficiary. Okay. So this is what is written over here. Then they can make payment on a monthly, quarterly, or half yearly basis. So monthly, quarterly, or half yearly basis, the subscribers can make their contribution. Okay. And they have this option of voluntarily exiting from APY, though there are certain conditions which they need to fulfill. Okay. And the government guarantees a minimum pension under this Atal Pension Yojana. So and if the actual contribution or the actual returns fall short of the guaranteed pension, then the government is going to cover up. The rest of the amount. And in this case, what you have to remember is that the government also co-contributes 50% of the total contribution. So either 50% of the total contribution is given by the government, or 1,000 per annum. So whichever out of these two is less, that contribution is to be made by the by the government. Okay. This is for those who joined between 1st June 2015 and 31st March 2016. Okay. And this co-contribution is available for 5 years only. For 5 years. So I have a homework for you. So this Atal Pension Yojana had replaced another scheme. It had replaced a scheme which was working before the Atal Pension Yojana. If you know it right now, you can answer in the comment section. If you don't know, then this is going to be your homework. This is going to be your homework. Okay. So basically, I hope you understood the meaning of co-contribution. 50% of the total contribution, or 1,000 per annum, whichever is less. So in this case also, there are tax benefits. If you put your money in Atal Pension Yojana, that is also tax deductible. Even in this case, it is tax free if you put your money in Atal Pension Yojana. And some important information, that more than 5 crore individuals have subscribed to the scheme. So more than 5 crore, you can see that more than 5 crore individuals, they have subscribed to the scheme. And out of the beneficiaries, 45% 45% are women. So 45% of all the beneficiaries of Atal Pension Yojana are who? Women. Okay, so I hope Atal Pension Yojana is clear. I hope there's no doubt in Atal Pension Yojana. Yes, Rushi. Yes, Nakli email Swavalamban scheme absolutely correct. So Swavalamban scheme has been replaced by Atal Pension Yojana in which year? In 2015. Okay, good. So you know this scheme. Good. Next is your Pradhan Mantri Mudra Yojana. Now these Mudra loans are short, what do you call the small loans? The amount of loans, small loans, which are required by, the people. Let's see. Pradhan Mantri Mudra Yojana. Again, it was launched in 2015. So we've seen most of these schemes are launched in 2015 under Ministry of Finance. What is the implementing agency? Mudra, Micro Units Development and Refinance Agency Limited. So, Mudra is the implementing agency under your Pradhan Mantri Mudra Yojana. Again, this is a central sector scheme. I hope now you know the difference between a central sector scheme and a centrally sponsored scheme. Very important. So, just remember it. Okay. Then what is the objective? To create an inclusive, sustainable and value-based entrepreneurial culture. So this is, to improve the entrepreneurial culture, to, to help the entrepreneurs, the small entrepreneurs who want to, move to higher levels of development, who want to contribute to the development of the country. Okay. So who are the beneficiaries? Any Indian citizen with a business plan. So who are the beneficiaries? Any Indian citizen. Remember, any Indian citizen with a business plan for a non-farm sector income generating activity, which is not related to agriculture, which is not related to your farm, but it is related. It can be related to allied activities. So all the non-farm activities, if it is income generating, if any non-farm activity is income generating, then and needs credit which is less than 10 lakh, and needs credit which is less than 10 lakh, that comes under your Mudra Yojana. So who are the beneficiaries? Anyone who has a business plan, anyone who has a business plan, a business plan related to a non-farming activity, non-farming activity, okay, which is income generating, which is income generating, and their requirement is less than 10 lakhs. If less than 10 lakh loan is required, then you can avail it under your Pradhan Mantri Mudra Yojana. So just remember these key points. When is it launched? 2015. Ministry of Finance. Implementing agency is Mudra, Micro Units Development and Refinance Agency. It is a central sector scheme. And it is for any business plan, any Indian citizen who has a business plan related to a non-farm activity which is income generating and needs loan less than 10 lakh. Now there are three categories of loans under Mudra: Shishu, Kishore, and Tarun. So do not forget this categorization: Shishu, Kishore, and Tarun. So if you talk about Shishu, it covers loans up to 50,000. So for loans up to 50k, that is called a Shishu loan. If it is between 50,000 to 5 lakh, that is your Kishore. And Tarun is if it is between 5 lakh to 10 lakh. Now there is a recent amendment which was done. Tarun Plus category. Tarun Plus category has also been added. That means the limit of the Mudra loans has now been increased to 20 lakh. So if you want a loan between 10 lakh to 20 lakh, you can avail it under your Tarun Plus. So initially there were three categories, but now there is another category which is your Tarun Plus category. Okay? Okay? So, Tarun Plus category. Yes, Prem, the limit has been extended to 20 lakhs under the Tarun Plus category. So, usually, initially there were three categories: Shishu, Kishore, and Tarun. Now, there's a fourth category called Tarun Plus, wherein it has been extended to 20 lakhs, 10 lakh to 20 lakh. Okay, Prem? Okay, Prem? So, a debit card is issued for the Mudra loan account. So that withdrawals can be there, deposits can be there. So efficient management of working capital can be done through the debit card. So you have to remember, what you have to remember in this is these types of loans: Shishu up to 50,000, Kishore between 50,000 to 5 lakh, Tarun between 5 lakh to 10 lakh, and Tarun plus from 10 lakh to 20 lakh. So just remember this. Okay, clear? Clear Pradhan Mantri Mudra Yojana? Any doubt till here? Any doubt till here? Excuse me. Okay. Next is your Mahila Samman Savings Certificate. So now this was launched in 2023. So the word Mahila is here, so it is basically for women. And savings certificate, so you can see that it might be for financial inclusion for women. Okay, so Mahila means women, Saman Savings Certificate, so it is related to financial inclusion. Okay. Okay, so again, it is under Ministry of Finance. Launch year is 2023. Tenure is from 2023 to March 2025. So it was for 2 years. So this, this period is also going to be over. So let's see if this will be extended or not. So it is for financial inclusion among women in India. All women eligibility, all women or by the guardian on behalf of a minor girl. So who are the beneficiaries? It is either a woman or it is any guardian if the woman is a minor, if that child is a minor. Now in this case, so this is basically a saving thing, so you can save through this. So minimum deposit is of 1000 rupees. So minimum deposit is 1000 rupees, and that can be given in installments of rupees 100. So rupees 100 installments. And what is the minimum deposits? Minimum deposit is 1000 and maximum deposit is 2 lakh. So minimum deposit is 1000, maximum is 2 lakh. Okay. Okay, then interest. What is the interest which will be provided if these women save their money through this Mahila Saman Saving Certificates? They are going to get 7.5% interest per annum. So going to get 7.5% interest per annum if you save your money under this Mahila Saman Saving Certificate. Okay, so interest is compounded quarterly. Okay, and withdrawal is after 1 year from of account opening. You can withdraw 40% of the balance. So after 1 year of opening your account, you can withdraw 40% of the balance. Okay. So if the beneficiary died during the period, then the closure of the account can be possible. Or if there is any life threatening disease or death of the guardian, then with relevant documentation, prematurely you can take out that money. Okay. Okay, so this was related to your Mahila Saman Savings Certificate. This was basically to increase the savings behavior among women so that they can be financially secure. And how much interest is paid to them? 7.5% per annum. What is the minimum amount? 1000, which can be paid in installments of 100 rupees, and maximum limit is 2 lakh. Okay, this is what you have to remember. Clear? Then is your Pradhan Mantri Jan Dhan Yojana, most talked. This is the most talked about, scheme. Very important scheme. Very important scheme. So this is also for financial inclusion. This is also for financial inclusion. Again, it was launched in 2014. So Pradhan Mantri Jan Dhan Yojana 2014. Do not forget the year. Ministry of Finance. What is the objective? Ensures access to financial products and services at an affordable cost, so that each and every person can have access to financial services. It is for them. So at a lower cost than usual, they can avail these financial services. That is what is the motive of your Pradhan Mantri Jan Dhan Yojana. Okay. So who are the beneficiaries? Any person who does not have a bank account. So anyone who does not have a bank account can open under this yojana, can open a bank account under this yojana, and this bank account is also a zero balance account. So you do not need to keep a certain balance under this Jan Dhan Yojana account. So a zero balance account. Okay. So it is going to also provide a free accident insurance coverage of rupees 2 lakhs. Okay, so if you issue indigenous rupee debit cards, then you're going to get a free accident insurance coverage of 2 lakhs. Remember this. So it is going to be a zero balance account where you do not need to maintain any balance. So it can provide, if you issue this, this bank account, if you issue the debit cards in this, in that case, you can get micro insurance, you can have overdraft facility, or you can get micro pension, micro credit. So small loans you can get through this. Overdraft facilities, rupees 10,000. Overdraft facilities that when you can take out extra money from the bank account. So for eligible adults, it is up to 10,000. The repayment period is 36 months. So if you take a loan, the repayment period is after 36 months. So that is a lot of time. And what is the age limit that you can open up this account? 18 to 65 years. So I know it is difficult to remember these years, but you have to remember because MCQs are asked from these type of things only. Right? So 18 to 65 years is the age limit for Jan Dhan Yojana account holders. Accidental cover, increased up to 2 lakh. So initially it was 1 lakh. Previously it was 1 lakh. The accident cover has been increased to 2 lakh. Okay, so here we are talking about free accident insurance. So initially it was 1 lakh, but now it is 2 lakh. Okay. So, these, if you open an account under Pradhan Mantri Jan Dhan Yojana, you will be eligible for direct benefit transfers. You will be eligible for Suraksha Bima Yojana that we did yesterday. You will be eligible for Mudra loans. You can take through the Mudra scheme. You will be also eligible for Atal Pension Yojana. You will also be eligible for Jeevan Jyoti Bima Yojana. So if you have a Jan Dhan account, you can that account will also be applicable for all these schemes. So we did JJBY, SBY yesterday. Today we did Atal Pension Yojana and Mudra scheme. So through that you can use your Jan Dhan account only for that, and even for direct benefit transfers. What do you mean by direct benefit transfers? What do you mean by direct benefit transfers? What is DBT? Anyone? What do you mean by DBT? Direct benefit transfer, anyone? Prem, Nakli, Email, Rushi. Anyone, what do you mean by direct benefit transfer? So what is the direct benefit transfer? Basically, it is if you have to get any incentive in monetary terms. So rather than having any intermediary transferring that money to you, because what happens is if there is an intermediary who is going to give you that money, then a lot of there is scope for corruption, there is scope for leakages. So to avoid that, to avoid intermediaries, directly the amount is going to be added to your account. It will be credited to your account. So, for example, if you are part of the MG Narega scheme and you have to get that money, so it will be directly transferred to your bank account. Rather, we give it to one person who distributes it to you. So there is a lot of scope of corruption in that case. That is why this direct benefit transfer had been started. Okay. So yes, the unilateral transfer amount, that it can be unilateral, it can be after doing some work also. For example, it can be, if you are giving subsidies, that can be directly credited to your bank account. Or for example, I've given you this Manrega example. That is what is called direct benefit transfer. Okay, clear? Then we have another important scheme, which is your Stand Up India scheme. Stand Up India scheme, it was launched in 2016. So remember, The year it was launched in 2016. Again, Ministry of Finance. So what is the aim? So it is going to offer bank loans, amount from 10 lakh to 1 crore. So what is the amount of loans which are going to be offered through the Stand Up India scheme? From 10 lakh to 1 crore for greenfield enterprises. So now there are two kinds of projects. uh, there are greenfield projects and there are brownfield projects. Anyone who knows the difference between a greenfield investment or brownfield investment, or greenfield projects or brownfield projects, what is the difference between greenfield and brownfield? Anyone who knows the difference? Anyone who knows the difference? Anyone who knows the difference between a greenfield project and a brownfield project? So see, when you are talking about greenfield investment or when you're talking about greenfield projects, that means you are investing in a brand new thing. So you're building it from scratch. You're building the company or you're building the industry from scratch. But if there is already an existing company or wherein you are investing or wherein you are just trying to renovate it or something, that is what is called a brownfield project. So the bank loans which are provided under your Stand Up India scheme, the loan is going to be between 10 lakh to 1 crore, and it is going to be for greenfield projects, brand new projects. Okay. So Prem is saying greenfield investment is setting up from scratch and brownfield investment is buy out the existing. Yes. Green is newly and brown are build already projects. Absolutely correct, Rushi. Absolutely correct, Prem. That is what is the difference between greenfield and brownfield. That's good that you know it. These are some basic terms that you should be knowing. So for greenfield projects, for greenfield enterprises, this amount of loan between 10 lakh to 1 crore, that these kind of bank loans are offered to these enterprises for greenfield projects. Okay. So this scheme is to promote entrepreneurship. So this is basically for your SC/ST, for SC/ST or women entrepreneurs. So majorly the scheme is for SC/ST or women entrepreneurs who have a potential to bring in this industry or bring in their enterprise up to a top level. So what you have to remember is that it is basically for SC/ST or women entrepreneurs. So these businesses, whatever these greenfield enterprises that we're talking about, they can operate in manufacturing or services or agriculture allied activities or trading. Okay. So 51% share must be of an SC/ST or a woman entrepreneur. So what you have to remember is Stand Up India scheme is for entrepreneurs, but which kind of entrepreneurs? SC/ST or women entrepreneurs. How much loan is going to be provided? 10 lakh to 1 crore, this amount of loan. And for what? For greenfield projects. When was it launched? In 2016. These are the key points that you need to remember. And what is the implementing agency? SEBI is the implementing agency, which is your Small Industries Development Bank of India. So SEBI is the implementing agency, and it is a central sector scheme only. Very important. The Stand Up India scheme, it is open to SC/ST or women entrepreneurs who are at least 18 years of age. So who are at least 18 years of age, we are going to give loan to those kind of entrepreneurs who are SC/ST or women and more than 18 years of age. Okay. So the nature of loan is going to be for both term loan as it is going to be a composite loan. So both term loan means long term loan, and for working capital requirements also. Working capital requirements means daily day to day requirements that you need for raw material or day to day expenses. So from ranging from 10 lakh to 100 lakh for working capital. Okay. Purpose of the loan is that you are giving it to manufacturing, services, agrarian activities, trading sector, specifically for SC/ST and women entrepreneurs. So this is focusing on SC/ST women. Do not forget this important update. Okay. So this loan amount would be 85% of the project cost, which will cover term loan and working capital. And this requirement does not apply if the borrower's contribution along with support from other schemes. So basically, 85% of the project cost will be covering both your term loan and your working capital. Okay. So this requirement is only 85% of that. This requirement is only possible if the project, if the women, the SC/ST or the women contribution is less than 15%, only then this will be applicable. So if this investment is more than 15%, say 30% or say 50%, then this size of the loan of 85%, that won't be applicable. So a lesser amount of loan will be provided in that case if your own contribution is going to be more. Okay, clear? So this is what is your Stand Up India scheme. So the loan has to be repaid after 7 years. So the loan repayment period is 7 years. And maximum moratorium period is of 18 months. So what do you mean by moratorium period? You might have read this in many schemes. What do you mean by moratorium period? Any idea, anyone? What is this moratorium period that is mentioned over here? So they are saying that loan has to be repaid within 7 years with a maximum moratorium period of 18 months. What do you mean by moratorium period? Rushi is saying additional period. No, not additional period. Anyone else? Prem, Nakli email, any idea? What do you mean by moratorium period? So see, when you repay your loan, it is not that you pay that loan entirely in lump sum amount. You don't do that, right? You do it in installments. You do it in installments. So say you have to pay monthly installments. So this gap, for example, in 1 month you have shortage of, for example, in 1 year, say in January you have a shortage of money. Say in June you had shortage of money. Say September also you had shortage of money. December also you had shortage of money. So you do not pay in these 4 months. So aggregate in 7 years you have this 18 months or 18 months period wherein you can be exempted. That is called moratorium period, where only aggregate 18 months. It is fine if you don't pay in 18 months. You can pay it, you can pay together in the month where you have extra money. So this exemption wherein you do not have to pay the monthly installment, that is your moratorium period. So in these 7 years, aggregate only for 18 months, you can default on your payment. That means if you have any shortage or if you're not able to pay it at that point of time. Is it clear now, moratorium period? Is it clear? Yes. So Nakli email knows about this. So you don't need to pay. You don't need to repay the loan for 18 months aggregate. So in 1 year, if for example for 4 months you don't have, in the other year you don't have for 5 months, so that is going to be exempted up to 18 months only. Okay. Clear? Clear, Rushi? Then working capital up to 10 lakh can be sanctioned through overdraft facility. So through overdraft facility, you can take up to 10 lakh of loan. Okay. Then margin money. What do you mean by margin money? What is margin money? Anyone? What do you mean by margin? What is margin money? I think we've done it We've done it during monetary policy also, wherein we did margin requirement in case of your uh, qualitative tools of monetary policy. I think Prem will know it. Exactly, Nakli. Email excellent amount that the borrower must contribute from their own funds. So what happens is when you take a loan, there is some amount that you need to keep as collateral. You have to keep as margin money. So that margin money we are talking about. So when you avail a loan, you have to contribute from yourself also. So there is this 15% margin money requirement. So that can be met through other schemes also, if there's any other scheme that you're enrolled in, so you can meet through that also. And out of that, 5% can be through the other schemes, convergence of other schemes, but 10% has to be from your own funds. So 10% of the project cost, that has to be coming up from your own funds. Okay, so this was all about your Stand Up India scheme. So that is what you have to remember. Okay, so remember 2016, 10 lakh to 1 crore, SC, women, and 18 years of age, which is the implementing agency. SEBI is the implementing agency. So all these things you have to remember. Repayment period is of 7 years. Moratorium period is of 18 months. Clear? Any doubt till here? Any doubt till here? Please let me know. Then we are going to move forward with the next Yojana, which is your Pradhan Mantri Vaya Vandana Yojana. Pradhan Mantri Vaya Vandana Yojana. Clear? Okay, good. So now, next is your Pradhan Mantri Vaya Vandana Yojana. Again, it is launched in 2017. It is launched in 2017. So this is a different year. So remember it. Ministry of Finance. So now this is a very unique scheme, because this is for people who are beyond 60 years of age. So this is for people who are above 60 years of age. So to safeguard these people who are above this, to provide old age pension to these kind of people, that is what this scheme is for. And the minimum investment amount, the minimum age for investment is also 60 years. 60 years and above. So if you're 60 years old, 65 years old, or how many ever years old, this scheme is for them. This yojana is for them. This is for their social security during their old age. This is for those kind of people who failed to save some money, or who distressed individuals, distressed old age people. So for them, this is a social security scheme. Okay, so this is for social security for 60 years and above population. And what is the implementing agency? It is the Life Corporation of India. LIC is the implementing agency. Do not forget it. And what type of scheme is it? Central sector scheme. Minimum entry age. So you can see it is 60 years. When you have completed 60 years of age, for example, you are in the 59th year, then also you cannot avail it. You have to be 60 years of age to avail this scheme. And maximum entry age, no limit. Even if you're 100 years old, you can take this scheme. Okay. And the policy term is for 10 years. What is the policy term? 10 years. And investment limit is rupees 15 lakh per senior citizen. So what is the investment? You can, in lump sum amount, you can provide this 15 lakh investment by the senior citizen. The minimum pension that you can receive is 1,000 per month, and maximum pension either 9250 per month, or 3,000 per quarter, or 27,750 per quarter. Or you can get minimum 6,000 per half year on a half yearly basis, or 55, maximum can be 55,500 per half year. And if you want yearly pension, then it can be 12,000 per year, the minimum pension, and maximum pension can be 1,11,000 per year. So this is the limit investment. This is the limit. This is the minimum pension and the maximum pension that you will receive under the Pradhan Mantri Vaya Vandana Yojana. Okay. So for participating, individuals make an initial lump sum payment. So initially you have to make a lump sum payment. Minimum purchase price is 1,56,000, which is going to guarantee a monthly pension of 1,000 rupees. So we saw that the minimum pension amount is 1,000 per month. So if you are investing 1,56,000, if you are purchasing 1,56,000, then you are going to get 1,000 per month as your pension. And if you are, your maximum purchase is 15 lakh, and that is going to give you a monthly pension of 12,000. Okay. And the assured pension is payable on a monthly basis. Assured pension on a monthly basis. So now, from where was this scheme influenced by which scheme? Varisht Pension Bima Yojana. So this was for old age. It was a pension scheme. It was a pension scheme related to your insurance scheme. In 2003 it was launched, and Varisht Pension Bima Yojana 2014. So this scheme, Vaya Vandana Yojana, it is influenced from these two schemes. Okay, for example, if the person has died during the 10-year policy term, the purchase price will be reimbursed to the designated beneficiary. So that amount will be reimbursed after the death. And if the pensioner, survives after this 10 years, then the purchase price will also be given, and the final pension installment that will be payable. Okay, so purchase price and the installment, final pension installment, that will be payable after the maturity. So this is a very unique scheme. I'm sure you might also have not heard about this scheme. So this is for the old age. This is a little unique scheme. Is it clear? Is it clear? Is it clear? So let's just revise it from the start. So the first scheme that we did is your Atal Pension Yojana. So it is related to your pension. PFRDA is the nodal agency, the implementing agency. This is a central sector scheme. When was it launched? It was launched in 2015. Minimum, what is the age limit that you can take up this pension is 18 to 40 years of age. So you should have a savings bank account or a post office savings bank account. That is mandatory if you want to join the Atal Pension Yojana. Okay, so 1,000 to 5,000 amount you will be receiving as pension, and it can be on your contributions can be on a monthly basis, quarterly basis, or half yearly basis. Okay, and government will also co-contribute. So Atal Pension Yojana, if you want to see this Atal Pension Yojana in detail, so I have taken up a YouTube session. You can search Atal Pension Yojana by Mannat Ma'am on the Oliveboard YouTube channel, and from there you can read this in detail. So for the NPS exam, I had taken up this scheme. Okay. Then we have Pradhan Mantri Mudra Yojana, with implementing agency is Mudra Micro Units Development and Refinance Agency Limited, Ministry of Finance, 2015. Maximum schemes are in 2015. It is a central sector scheme. So it is for that kind of business plan which is in a non-farming activity which is income generating, and you want loan less than 10 lakhs. So now this limit has been increased to 20 lakh. What you have to remember is Shishu, Kishore, Tarun, and Tarun Plus. Shishu loans up to 50,000, Kishore from 50,000 to 5 lakh, Tarun from 5 lakh to 10 lakh, and Tarun Plus from 10 lakh to 20 lakh. Okay. Then we have the Mahila Samman Saving Certificate. So this is for women who can save some amount. So if they save, they get an interest per annum of 7.5%. Okay. And minimum deposit requirement is 1,000, which can be given in increments of rupees 100, and maximum is your 2 lakh. Then is your Pradhan Mantri Jan Dhan Yojana. So this is a very important scheme. This talks about financial inclusion. This talks about opening up a bank account, zero balance bank account. So you might have heard about this Jam Trinity. Have you heard about Jam Trinity? What is this Jam Trinity? Have you heard about Jam Trinity, anyone? Nakli email, Rushi, Prem. Any idea what is this JAM Trinity, JAM Trinity? Anyone aware of this JAM Trinity, which is your I'll tell you, but if you know about this JAM Trinity, JAM Trinity, then just let me know. I'll wait for a minute if you want, if you need time to write or just think. You might have heard about this. No, so this JAM Trinity is basically J for Jandhan, Jandhan, A for Aadhaar, and mobile. Trinity. So this is a trinity. These are the three things which were very important at that 2014, 2015. These three things were very important in digitization of the economy, in digitization of the economy, in providing financial inclusion in the economy. So bring everyone should have an Aadhaar card. Everyone should have a smartphone or a mobile, and everyone should have a Jandhan account. So to facilitate, improve the banking performance of people, to make them financially secure, to ensure financial inclusion, to improve digitization, for all these things, this JAM Trinity had been, was the talk of the at that point of it was most talked about. That is what is the JAM Trinity. So if you get an answer related to financial inclusion, then you can write it. You can write it in your answers also. You can talk about JAM Trinity. So Nakli email said Aadhaar, phone number and bank account link. So link your Jandhan account with your Aadhaar card and your mobile. So everybody should have a mobile. Everybody should have an Aadhaar card. Everyone should have a Jandhan account. So okay, yes, Rushi. So I hope this is clear. Okay, so this is your Jandhan Yojana. It was launched in 2014. So that financial services are available. Zero balance bank account is opened. You get a free accident insurance coverage also in this case. Okay, and 18 to 65 years you have to remember the eligibility. And you can, if you have a Pradhan Mantri Jan Dhan Yojana account, you will be applicable. You will be eligible for all the other schemes like Pradhan Mantri Jeevan Jyoti Bima Yojana, Pradhan Mantri Suraksha Bima Yojana, direct benefit transfers, Mudra scheme, Atal Pension Yojana. So if you have an account in Pradhan Mantri Jan Dhan Yojana account, if you have that kind of account, you can be eligible for all other schemes which are mentioned over here. Then is a Stand Up India scheme. You have to remember that it is for SC, ST, and women entrepreneurs. Okay, and 10 lakh to 1 crore amount will be provided under this. It was launched in 2016. It will be implemented by Small Industries Development Bank of India. Okay. Then is your Pradhan Mantri Vaya Vandana Yojana, very unique scheme. This is for the individuals who are above 60 years of age, who have completed 60 years of age. What is the implementing agency? LIC is the implementing agency. This is a kind of central sector scheme. I hope you know the difference between central sector and centrally sponsored scheme now. Minimum entry age is 60 years. Maximum, there is no limit. Policy term is for 10 years. So this scheme is for 10 years. Remember, an investment limit maximum is 15 lakh per senior citizen. And you have to remember this table, that minimum pension and maximum pension. So if you want monthly pension, minimum is 1,000. If you want quarterly pension, minimum is 3,000. If you want half yearly pension, then minimum amount is 6,000. If you want annually, if you want the pension, it is 12,000. And maximum, you can see over here, if you want monthly, then 9250, quarterly 27,750, half yearly 55,500, and per year 1,11,000. This is the maximum pension that you can receive. Okay, and my minimum purchase price is 1,56,000. Maximum is 15 lakh. So limit is your 15 lakh. Okay, and from which has it been? From which two schemes was it influenced? Virishtata Pension Bima Yojana in 2003 and Virishtata Pension Bima Yojana, which was launched in 2014. Okay, so 10 years is the maturity period. Clear? Any doubt from today's class? Anyone? Any doubt? I hope it is clear to you. I hope you've understood all the schemes. I hope you have attended the previous class also, the class that I took yesterday. So there also we have covered many schemes from Ministry of Finance, and today also we have covered a few schemes which are important. The most important schemes we have covered, which are under the Ministry of Finance. So if these things, if these schemes are clear to you, or if there's no doubt, then please let me know in the comment section. Just give me a thumbs up if it's clear to all of you who are watching this live video. Just give me a thumbs up in the comment section. Then I'll just end this session. We are going to meet tomorrow with government schemes. We are going to move on to the next ministry. Okay, and tomorrow we are going to cover the schemes. Okay, and okay, Rakhi email. What about Rushi, Prem? Just give me a thumbs up if it's clear. Just let me know if everything is clear to you. And after this class ends, kindly give your review, kindly give your rating, and kindly give a feedback, because your feedback really matters to us educators. Okay, so we'll see tomorrow. We'll see you tomorrow then. Prem, clear? Just give me a thumbs up, Prem. Only then I'll end this session. So keep studying, download the PDFs, keep revising it, because you can forget these schemes. Because most of the things are, for example, the age 18 to 50 years, 18 to 70 years, 18 to 65 years. So a lot of difference is there. So only if you keep revising it time and again, you will be able to understand, you will be able to memorize it, because government schemes is a major portion in your exam, especially your RBI Grade B. All these regulatory exams, government schemes, questions from government schemes are maximum. So you need to do it very nicely. You need to do it in detail. Okay, fine then. Let's meet tomorrow. Have a good night. Take care, and bye bye. Keep studying. Bye.